Hello, everybody, and welcome to our first episode of our newly refreshed show Finance Friday with my friend Evan from Wreckfish Capital, in which we'll be discussing current events in public markets and in general, and discussing it from a perspective of an investment perspective and how to look at opportunities and trends and strategies or ways of looking at the market and finance investment in general from our perspective, and we'll just be chatting about these things. And so, welcome if you're watching this on YouTube. Leave in the comments whatever you think about these topics or anything else, and remember to like and share the video if you like it, and to subscribe to see other videos coming to this really good show about financial investments that we have started. And I don't know if Evan wants to say something for this inaugural episode. But we also have here people in the chat from Twitch. You can join us live on Twitch at Cordero Católico if you want to see this show live every Friday at 11 p.m. Spanish time. And yeah, should we get started, Evan?
Yes, sir.
Yes, sir.
Uh, 11 p.m. Spanish time, 5 p.m. Eastern
Yeah, there you go. So you
for the
guys don't have
majority
to
of the
do.
world.
Yeah, good point. Maybe I should start saying it in Eastern terms.
In
In
Eastern time, yeah.
instant time. But anyway, so basically, as you guys can see in the title here, the topic or whatever the theme of the show tonight is DeepSeek and the disruption of tech. So that being DeepSeek, the events that have happened recently about around DeepSeek being a Chinese company in the AI space, that they have come up with a pretty good AI model, like an LLM, like a large language model, similar to ChatGPT or similar to what is the Google one or any of these ones that are running around
Gemini.
now. Yeah, Gemini. And but it is actually quite good, and they didn't have nearly as much of a budget as these big companies. So the whole notion up until now was that you need a lot of money to train these models, that these other companies had a huge advantage, and that they were ahead of the industry, and that you just needed to pour a lot of money. So a lot of VC funds, a lot of private equity funds, a lot of actual finance funds, just like public markets funds too as well, being pouring money into these big companies, thinking that they were so much ahead, and then they're easily disrupted by this new company DeepSeek. So then we expand also this theme to discuss in general how an industry like tech, or industries that are like at the edge, like people find interesting because it's always changing, there's always opportunity, they're a dangerous thing to invest in because you're very exposed to disruption. It's really hard to know exactly what will stick, what will not stick. And then also we kind of look at other companies that through history actually have, if you stick with them, they provide a safety of capital, like your money is safe with them because they're not as disruptible. And that actually, if you look at it with enough time, they grow more than these companies, right? Is that a good kind of summary of what you had in mind, Evan?
Yeah, that's good. So, yeah, to give some context,
Yes,
basically,
please.
DeepSeek is like Gabe said, a large language model that was developed, I think, just this month from a
Mm,
small team of
okay.
of engineers in China who actually more and more stuff is coming out as time goes on. Like apparently they're funded by a big fund in China as well. So there is more money than was originally thought of being
Mm.
poured in, but definitely significantly less. Like these guys were able to build uh, a ChatGPT, you know, what would the word be there? Like not imposter, but dupe, a
Like,
ChatGPT dupe
oh, okay. Like a
with.
copycat? Is that what a dupe is? I don't know what a dupe
Yeah,
is.
yeah, just like another ChatGPT, an LLM with
Right.
very little money. And the most interesting thing is that they used chips that were out of date. They used older chips,
Oh,
whereas here in America, like everything going behind the AI revolution is all about the cutting edge chips
right.
and the money, which is estimated so
Oh,
far the capex. Yeah, yeah, the capex involved
okay.
in in this whole AI thing with the large language models is said to be around 500 billion so
Gotcha.
far,
Just for
and that
some
number is
context for
expected to grow
people,
substantially.
CapEx is capital expenditures, basically the money that a company has to spend in like infrastructure or machines or whatever they need to run their
Oh yeah,
business.
just investment. Like
Yeah.
investment is it's not necessarily capex. It's just like
Okay,
that's how
okay.
much money has been used
And
by every
actually,
company chasing AI in the US.
now I also understand why. Because at first I was like, why is Nvidia? Because when this news came out, right, Nvidia, the stock, actually, let me show you here in the screen, went down significantly in price. Like I think it was like 20%, you said, or something like that, right, Evan? And I was like, why?
20%.
No, it was
Yeah,
17, yeah.
and
So,
for a $3 trillion company, 20% is we're talking about like $600 billion
right.
of
It's
market capitalization, you
so, but
know?
I was wondering, like, why? It's like if this Nvidia is not making the engines, this is not open AI, so why is it going down? But it's what you're saying, right? The fact that they don't need like the latest chips or something like that, which is what Nvidia is kind of marketing themselves as, right?
Yeah, well, the infrastructure, right? So it's like
Hmm.
we're in America, they're spending so much money on infrastructure
Hmm.
that, it's like the Chinese company now has proven that this is completely, it's not necessarily needed, which is
Right.
crazy.
Yeah. No. I
So
think
that's
like.
what,
Uh huh.
nah, go ahead, go ahead.
I was just gonna say the memes that I've seen about it with like that Chinese guy from the comedy shows just like showing up with a cigarette in his mouth and just kind of building something out of out of a bunch of tin cans. It's like that's really the
Oh
the
yeah,
vibe that is
yeah,
given, right? Which is like all these people spending a lot of money and putting a lot of like effort in some sense to being at the edge of technology, and then somebody in China just with a much lower budget makes it happen. Cheese is asking, what kind of loan can I get to make my AI engine? Well, I don't know. I guess you would need. I mean, depends what.
loan.
Yeah, I mean, I don't know if he's being serious or not, but yeah, like to finance to
Well, yeah,
start an
like
AI
yeah,
engine. But yeah, is the Panama Canal
the
considered American infrastructure? Not anymore. They gave it up. They sold it. Terrible deal.
The Panama Canal is it's shared, but as of right now, I think there's a ton of Chinese military that are there,
Hmm. Oh,
from what I
Chinese.
understand. I mean, yeah, if you listen to Donald Trump,
Oh yeah, I saw
apparently,
that. Yeah, that. But I didn't know it was military. I thought he was just saying that there's a lot of China. Well, I guess it would be the military, like the fact that there was a lot of
yeah,
Chinese
there's
influence in
military. Well,
Panama.
they're just yeah, yeah, because I mean, they use it a lot, and it's
Hmm.
supposed to be that the Panama Canal only belongs to Panama. No, that's like the whole.
That's what I was saying. That I think was what I heard too was like that the bad deal was the fact that I think it was Jimmy Carter sold it to Panama for $1, but with the part of the deal was that the U.S. would have like special treatment. Like it would be cheaper for them to go through it. But like then Donald
Yeah.
Trump at least is saying that that's not happening. But also I think even if it was happening, it is a terrible deal. Like I don't know why they gave it to Panama. Like I get why like the British Empire gave away the canal, the Suez Canal, because there was an actual revolution. Like the Egyptians rose up and they tried to kill the British people. So they're like, okay, okay, I guess we'll give you the canal. But in Panama, there was not such a thing. I don't think so. Like there was no military pressure to the extent that they would need to give it up. And yeah, but I don't know. Must have had their reasons.
Yeah, it was for the free trade agreement. It was just like a gesture of good
Oh, of
faith, I
democracy and
think.
whatever.
No.
Yeah, terrible
hmm
strategy. No idea. You were
The
talking about
biggest the biggest
capex.
piece of infrastructure in
Uh-huh.
America is railroads, I think, to this day.
What do you mean the biggest piece of infrastructure? I seen like, what do you mean as biggest? Like the one that moves the most money,
Yeah,
or?
like yeah, yeah. And then in terms of like value,
Okay, sure.
I think it's the rails.
Oh, right. Like
It's
even to move
interesting.
merchandise, they continue to use a lot of the trains. Yeah, I didn't think of right. Like
Yeah,
most of the
yeah. It's
merchandise.
interesting, and it kind of segues into the point of
Hmm.
the topic of discussion, where it's like railroads are still like, you would think that with all of these things that have come out, the advancement of, air freight and all these things that are being promised, like bullet trains and everything, railroads are still the most cost efficient way to move anything across the country,
Hmm.
which I think is super interesting. You know what I mean?
Yeah, yeah. The idea, but I mean, that's the thing too with any infrastructure. It's like it takes a lot of like what's it called overhead, like the capital that you need at the beginning for things like building a railroad, building a telecommunications network. But once you have it done, it is a pretty good stronghold. But I guess it's even better than telecommunications, right? Because again, it goes back to because it's not so technological or less technologically advanced, it continues to be necessary to an
Yeah.
extent. Yeah, and you can innovate
It's
on top of
not
it.
it's not disruptable. Like, it's one of the original industries in America, and to
Yeah.
this day it has not been disrupted by anything, because there's nothing that is better. Even
The
with all the technological investments of the last, 100 years, it's still the best thing. And then that kind of is the point of today's video, where it's like you buy, or it's very easy as
Mhm.
a young investor or as a retail investor to get caught up in trend buying, because like it kind of goes with age. Like when
Right.
we're as we're coming up, we're kind of involved in all of the technological investments that are happening because we're using them, right? Like
Hmm.
everybody's on their iPhone, so it seems like an obvious choice. If you're not, like, because now we're talking about, obviously, the majority of people, they don't really understand investing on like a level that's deep enough, like an input output level.
Right.
It's more that they just think that I want to buy a company that I think is strong, like that is good.
Yeah.
And so most of the stuff in your knowledge sphere is like, Facebook, like you use Facebook every day, you use Instagram every day, so you're like, oh, I
Hmm.
want to buy Meta, or you use Google every day, so you want to buy Google.
Yeah.
You want to own the technology because it's what's affecting your life the most, you know?
Yeah.
You
Yeah.
don't really think about the industries underneath that are supporting all of this, or that kind of exist outside of the purview of, of your daily life,
Yeah,
and
I
think
think
about
it's
them as
like
good investments.
I mean here she's saying age or experience. I think yeah, I think it's a mix of both because I mean age comes with experience. It's like yeah, I guess that you can be more you can study finance more and then it's easier to understand these things even if you're not of a more of an older age. But kind of the point is like the idea that in this day and age like people just want to invest in things that they consider to be like innovations like they're like oh this is going to take over the world instead of looking at financial investments as like a vehicle where you put your money. Like instead of looking at where you placing your money, and then you got to think of whether it's a good point in which you're buying, whether it's at a good valuation, whether it's a safe place to put your money. Instead of oh, is this a great company with a great tech? Because that's not the point of making an investment. So that's kind of I think what Evan is speaking to. But even
And sometimes
uh-huh.
who's the investor, who's the
I was gonna
famous
say
investor
yeah,
that
that says to
talks about
invest in
like
things
buying
that
stuff
you
that you
know.
know?
Yeah, yeah. I was thinking the
Yeah.
same guy. I gotta figure it out. He was the guy from Fidelity, right? Fidelity most famous manager. What's his name? Peter something. Peter Lynch. Yeah.
Peter Lynch. Yeah, yeah,
Yeah,
yeah.
yeah. What's that book that he wrote? So yeah, but so it is true that you like you do know better about, but it's again I think it is an kind of like a simplistic view because it's like he's saying it from the perspective of a guy that is already in the world of finance, and it's like if you already understand what you invested in, you know, and what a financial instrument is, and you know what is a good valuation and stuff, and then you're like, okay, let me look for trends and then you're like oh let me talk to people that are like you know just live in the street and they're consumers or even to himself looking at the
Yeah.
things that's different than to tell somebody who doesn't know finance or who doesn't hasn't involved themselves to just invest in anything that they think is successful without you know regard for the
Yeah,
valuation
but
as
no,
much.
no, but
Uh-huh.
listen, there's a flip side to that coin. So like so it is kind of a good strategy if you're not really well versed,
Hmm.
because if you think about, like, oh, I like drinking Coke,
Right.
right?
Yeah.
It's a little bit different, right? So you can say, in the sphere of things that you use in your daily life,
Right.
where you're like, I really like this product, I'm going to invest in the business.
Yeah.
There are certain things that you like that are not disruptible, not easily disruptible, right?
Gotcha.
The focus should be on, like, if you want to buy, so if you want to buy Coca-Cola
Hmm.
because you like Coca-Cola, that's the first step, right?
Okay.
Then you should think a little bit more deeply about, okay, I like Coca-Cola. I know a lot of people that like Coca-Cola.
Hmm.
Did people 100 years ago like Coca-Cola? Yes.
Okay.
Will people in 100 years still like Coca-Cola? Based on that evidence, you can say that it's very possible. Whereas, like, if you said, "Oh, I really like going on Instagram. I really like Instagram."
Mm.
If you look back, if you just do a gut check and say, "Okay, did my parents like Instagram when they were my age?" No, because it didn't exist.
Mm.
So there's just not enough information for you to say, "Oh, will my kids like Instagram, or will somebody in the future like Instagram?" You know
Mm.
what I'm saying? Like, you're kind of using historical. It's not
Yeah.
just what you like, but also, like, you.
You're
I
kind
think
of
that's just kind of his point too.
observing culture. Okay, we have a few questions here that I think are interesting from. Well, also, hi Julius, welcome to the show. Here, I'm here with my friend Evan. Him and I are running this finance show every Friday, and he's from
Hello.
Redfish Capital. But she's just saying, don't you want to mix risks? For mutual funds, for example, they always ask how aggressive you want to be. So I guess you do want to
Yeah.
mix risk, but it's more of like, but it's a.
No,
What do you mean? No,
you don't want to mix. You don't want to mix risk. Risk should be the way you view the risk-free investment versus the risky investment, not the bundle of investments that you have.
but you
It's
don't think
about
it could be a good strategy to you stratify your investments into something that is like you put a little bit in more aggressive investments, and you put less, or you put more of
yeah,
your
but what
percentage.
is an aggressive investment? Like what
Well,
makes
for
a
example,
technology
even
investment?
the usual breakdown between buying bonds, like you're like if you're younger, you buy less bonds. If you are older, you buy more bonds, just for a safety of capital, like
Yeah,
you
yeah,
calculate the
that's it.
risk, right?
That's how you should measure risk. Yeah.
Okay, okay, well,
The
uh-huh,
risky asset, which is stocks,
uh-huh,
versus the non-risky asset, which is bonds. That's how you measure risk. Individual investments carry their own risks, obviously, because of the industries that
right.
they're in, but it's not it shouldn't like it's not uh what's the right way to think about it? Like every investment carries the same risk, right? Pretty
Hmm,
much. It's like
gotcha.
market risk and then individual company risk.
Hmm. Yeah, I get that, but
They're
I guess
not risky in different ways, is what I'm trying to say.
but
They're
you
both
don't
risky
think
in the same
there
way.
are sectors that could be more risky in other words? Like if you're buying consumer staples, like consumer staples being the sector that refers to companies that sell things that everybody
They
needs, like
no, they
soap
could be
and
risky in a different way. They
hmm,
both share the same risk, which is market risk
okay.
and then individual company risk.
Yeah, and then the individual risk is something that you would analyze on the basis of what investments you want to hold in your equities, right? And then you do the percentage
Yeah,
of
but
how much equities
that's
to own.
related to price. That's related to price, not what the
Hmm.
company does.
Ah, right. Yeah, I mean, yes and no. No, you don't think like if you
What you pay for the company
would you
and then
pay
the
for the
growth of the
company?
company, they're all the same. Like, unless you're talking about, I don't know, like there's obviously like existential risk where it's like if a company manufactures flamethrowers,
That's what I mean. Yeah, it's not the same as one
uh,
that does kind of be
then
sued or something.
yeah, yeah, fair enough, yeah. But those are risks that you can't account for, you know?
Yeah.
Same
I
thing,
mean,
like if
when you
you
bring up the price thing, it's also a way to balance that in which is like if you buy a pharmaceutical company at a very low price, you kind of it could be actually a less risky investment than buying a very solid, business at a very high price because you're at a risk of a very small thing disrupting the price more than it would the pharmaceutical thing something bad happening when the valuation is already low, right? So in some
yeah, yeah,
sense,
price is everything.
right. So
Price is
price is
everything.
everything. It's just like you gotta think, you gotta adjust the valuation to the actual inherent risk of the business itself. But yeah, but it's something that
Yeah,
you can
if you
control through
want
the
to, I
price.
mean, you don't have to. Like the perfect example
Right.
is like investing in China versus investing in the like Alibaba is in a way a very similar company to Amazon, right?
Hmm.
But people think that the risk of their geopolitical risk is elevated, and
Hmm.
so the valuation is cheaper, right?
Right.
But you don't have to look at that as like you don't have to use geopolitical risk as an investment thesis. You can just say this is cheaper than this, and then all these factors are kind of tied into it. You know what I mean?
Yeah, yeah, exactly. Like just as long as you take it into consideration in the valuation, then you can kind of address it all from the perspective of price. Yeah, the price is everything. Like price, it will be the same way as like we measure in a capitalistic environment, like the measure of time or effort. How much is my skill and my time worth, and you measure that in terms of money, so you can compare it with other people. And same thing with the objects that you buy and sell. So it'll be the same, which is like now
Hmm.
you're pricing a whole company of people and the risk and the geopolitical things and all that on the basis of a price. And that price, that way you can compare
Yeah.
with another company and they have a common measurement system. Yeah, which is the beauty of
And for everybody in
capitalism.
the chat,
Uh-huh.
when we're talking about price, we're not talking about the price of the stock.
Right.
We're talking about the output. So if you, um, damn, if you have a lemonade stand that sells, it costs you $100 to get all of the stuff up for the lemonade stand, and the
Yeah.
lemonade stand makes $100 a week. It's
Yeah.
a cheaper price to pay then if a lemonade stand that costs $100 only makes $50 a week, right?
Yeah. Now you mean like the like
So
you're
even though
talking
the
about like the price being like price relative to the value, right? No, no, is that what you're trying to
yeah, it's
explain
the
to the
price.
chat?
Uh,
I mean, because you're explaining PE
it's the
basically, right?
output. Yeah, you're just measuring the output. Yeah, it's the earnings of the company relative to the price per share. Yeah,
Yeah, yeah, yeah. Like because
or
it's
the
kind
total
of
price.
yeah, yeah, like what you're paying for. Because it's like if you just look at the price as in like the ticker price, what you're really looking at is what people are paying for something, but you gotta look at what they're paying for. So if that's why ratios like price to earnings are important, or if you look at it like earnings yield, which would be the opposite, like earnings to the divided by the price. But it's basically this is the actual price of the company. When you look at a ratio like this, or maybe price to the revenues, right, the money that they usually make on sales, because this is what tells you how much you're paying for the same output. Like what Evan was saying with the lemonade stand, right? If you have a lemonade stand and you have I don't know, an ice cream stand, and they're both on the same street, and the ice cream stand makes $50, but the lemonade stand makes $100 in profit, and both lemonade stands are asking you for $1,000 to buy them, the price of each is not $1,000 really. What you're paying is 1,000 for $100 or 1,000 for $50. So you're paying like 1,000 divided by 50, which would be what? Whatever. What I'm trying to say is that you gotta divide it.
Right.
Yeah, I don't want. I don't want to do the
Yeah,
math
like
right now.
if two of your friends were making businesses
Yeah,
and they asked you to invest the same amount, and one guy told you that if you invest $1,000 in the first year, he's going to
yeah,
pay you 100. Every year he's going to pay
yeah,
you 100. Your other friend said every year he's going to pay you 200.
yeah,
Even though you're paying 1,000 for both businesses, one business is making you more money, and that's just like,
yeah. One
yeah,
business is
that's
more
that's kind of one
expensive.
of the
Well,
most important concepts in investing, really.
yeah, actually, I have a good analogy to do with this. It's buying if you buy 2 kilograms of oranges or 1 kilogram of orange and they both cost $100, you're not paying the same price because one is costing you $100 a kilogram and the other one is costing you $200 a kilogram or $50 a kilogram. So that's the whole thing of like price is relative always to the output because what you're paying for is the output, not the company. So the ticker price is not that relevant because this ticker price is just telling you the price of the whole bag, just to say, of oranges. But the question is how much, what's the price per kilogram of oranges? So that kind of again goes back to the concept in a simple way. Okay, here Jesus wondering, which I actually don't know, how old is the stock market actually? Kind of like what kind of history do we have for the data that we look at in terms of finance? Because it is a good point that we only have a limited kind of a measure of businesses in the sense of capital. So let's see. But even before, right? Because even before the stock market, we were still measuring businesses. I mean, in a private sense. So, but I don't know. I guess in an aggregate, we never had. How old is the stock market? I think it's like what, like 100 years, something like that, maybe 200 years. 1792
No, way,
was that?
yeah, way older.
300 years, two
No?
hundred and something years.
Yeah.
Yeah,
The
200.
first
Yeah,
public
200.
company ever was the Dutch East India Trading Company that sold slaves.
Oh, okay. So then it is older because this is the New York Stock Exchange is from 1792. So you're saying what is the first one that you said?
The
The
first ever company that was publicly traded was the Dutch East India Trading Company. The company
Dutch
that was
East
responsible for
India,
the triangle, like what was that called? Like
like the trading of slaves. You're
the
saying, right?
ex yeah, well, it was like slaves for um what were they selling? It was like
Spices? Is that what you're
furs,
talking about? Spices, like the spice trade.
spices for
But
slaves for furs or something. I don't know.
okay, just trade. Yeah,
The 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 triangle or whatever it's called.
I actually don't know what the triangle you're talking about is, but
Somebody in chat has to know, no?
I mean, I don't know. Do you guys know? Anyone in chat knows what he's talking about? The East India Company. I mean, I know, but I've heard of that. Like also, I think in the part of the Caribbeans they show up. I don't know if it's there's a different East India Company, but I assume any East India company is basically companies that were trading goods around Africa, like going sailing around Africa to get to India.
Yeah, but it was called like the triangle trade or something
All
like
right, let
that.
me look it up.
Triangle
Let's
of
see.
trade?
That's East India Company
Yeah. Yeah, triangle of
triangle
trade. Yeah.
of trade. But what is
The
triangle of trade?
triangular trade was a network of trade routes between Europe, Africa, and the Americas involving the transportation of goods and enslaved people.
Okay. Oh, like,
known as the
but what?
transatlantic slave trade.
Oh, transatlantic slave trade triangle. Transatlantic slave trade.
It's just called triangular
I
trade
just,
if you type in triangular trade.
oh yeah, here triangular trade. I just want to see, like, what do you mean? Like, what is the triangle? Oh, I see here. They go down to the west
Europe,
coast of
Africa, and America.
Africa, then America, then to the Caribbean, and then up from the Caribbean to England. And that, okay, got it. Because
Hmm.
oh yeah, it seems like it has to do with the currents. Yeah, I mean, yeah, yeah, this is pretty cool.
Yeah, it also
Whale
just
oil,
gives you
lumber,
links
yeah,
to
it just became a
items.
bunch of different things too. Sugar, right? They will go all the way to the West Indies and bring sugar, molasses, and wood. Then they will go kind of up to North Africa to get whale oil, lumber, furs, rice. Oh, so this was just like, yeah, a way of moving trade, like goods around this area. And these were the
Hmm.
goods. Nice. Livestock
And this
and
was the
lumber.
first big
Wow.
company that ever traded. This is the first company that ever traded its shares
Oh, and that also
on
makes
the
sense why there's
exchange.
so many like, Africans in the heritages of like Puerto Rico, like all these Caribbean islands. It's because right, all the slaves would actually first be taken to America,
Yeah,
and then in America
yeah,
they
even
will
African
work,
Americans in North
and then
America.
only some of them will be brought then to Europe. Right, I see. Right, right, right.
Yeah,
Wow. Guns, clothes,
yeah,
and
and that
iron and
company,
beer
yeah,
to Africa. Manufactures goods and luxuries to Africa. Wow. Damn. West
yeah.
Indies.
I think anyway, we're kind of getting off the
Yeah, yeah,
off
yeah.
topic here.
Yeah, I just didn't know about that. Barter, yeah, I don't know if it
The
was through
point is,
barter or if they actually priced it with gold, but yeah, probably actually a lot of the transactions back then were through barter, especially with people that had less developed markets. Like probably when they were buying slaves or something from some tribe in Africa, they were probably paying them with with guns and whatever they because the
yeah,
Africans.
this is right here. This is the trade. This is the trade right here. Like what you're seeing is like this is the trade, dude. Like the Americans would get slaves from Africa, and the Africans would give up those slaves because they would get textiles from Europe,
Yeah, yeah. You're talking
and
about the
then
image I was showing
yeah,
a second ago, or a different thing? Because I don't know if.
no, I'm just
Oh,
talking about the
oh,
ship,
okay, okay, okay.
the trade. Yeah,
Yeah, yeah.
the trade was happening with physical goods. It was never gold or money or anything like
Oh,
that.
oh, okay, gotcha, gotcha. Yeah, because it's also not valuable. Yeah,
Like
because
maybe
it's
there was some
like,
gold.
yeah. I mean, it depends who they were trading. That's what I'm saying. Like, if there's an economy that trades that uses money, then it is valuable to give money. But yeah, for I assume for most people that they were trading with, especially the ones that were providing the main goods, it didn't really matter if they pay them with. Yeah, like they would rather be paid with things like guns and things. They did that in North America too. Even later, when they traded with the tribes, they would just give them guns to the Native Americans in exchange for what? Yeah,
Every part of the trade was a barter situation. Yeah.
yeah, that would make sense. You've been peeling away.
Pretty much.
Oh, peeling. But yeah,
So yeah, to get back on track,
right.
when 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 you start a portfolio as a retail trader, you want to buy the stuff that goes up a lot. So if you have a buddy that says, "Oh, like I bought Nvidia at $50 and it's at 200, like you should get in now," and all
Yeah,
this kind of stuff,
yeah.
that's kind of everybody's first experience with
Mm.
stocks is like, what's gone up? I should buy this. Oh, like I know about Google, I'll buy Google and all this kind of
Mm-hmm.
stuff. But what the DeepSeek technological advancement of the last week showed is that no big company, no matter how reputable, no matter how well known, no
Mm-hmm.
matter how much it permeates everyday life, is still susceptible to the power of innovation, right?
Yeah.
Is that any company can get disrupted so easily if it's in a sector where even they made their names off disruption, right? Like Nvidia, their whole thing was that they came in and they designed chips better than anybody else, right?
Mm-hmm.
So they were able to accrue market share of this new industry that was growing rapidly. And then in return, the stock went up a lot, right? There's always been examples of this throughout history. Like
Right.
Intel in the 2000s was, the biggest company on the S&P. Now it hasn't even reached that same peak in
Yeah.
terms of like the stock price since then.
Yeah. Let me
And
pull it
so
out for people who
when
want.
you're thinking about, owning stocks for the long term, right? Because obviously everybody that doesn't work in finance should be thinking about investing money for the long term for retirement, right? They shouldn't be
Mm-hmm.
thinking about, I mean, I guess yeah, you should think about analyzing stocks, but like in general, you should think about buying and holding good quality companies for the very long term, even if you have to own the broad index, all this kind of stuff, because technology is so easily disruptible. And then if you look at like if you look at the last couple of years, you can say, oh, this return on Nvidia has been insane, right? But then all you have to do is look at it. You should, Gabe, you should open up
Yeah, the 200, the S&P
the
one, or
the one about the 10, yeah, the 10, the 10 stocks that outperformed the highest performing stocks of the last 100 years, right?
the 200. Yeah, yeah, this one. No way. Are you seeing the screen?
The bank rate
The bank rate
article.
one. Okay, yeah, yeah, yeah. Just to show that the companies that actually outperform in a period of what this is a study, right? That looked at 29,000 public companies from 1925 to December of 2023, right? And these are the companies that outperform the rest. And when we can see here that these are companies that are big, like the ubiquitous, that like we see them, we know about them, but we don't think about them as investments. Like how Evan was saying, like when you hear first of investments, like somebody telling you about, oh, I bought Nvidia at this price and it has gone up like crazy, and then you try to buy companies that are like a great innovation. But as we were seeing, for example, with Intel here in the price chart, and Evan was saying, that those companies can really innovate and grow a lot, and there's no denying that, but then they get disrupted by something. And then if you look at it from the moment that you get on the wave to the moment of now or at some point, there can be a huge change in the landscape. Whereas if you invest companies like this, like Altria, right? Altria is Philip Morris, like they own like tobacco, like Marlboro, right, and Black and Mild, and a bunch of main
Cigarettes.
brands, cigarettes, yeah. So and they are number one in the terms of or one of the main companies to perform really well. Return, it's like a 16% annualized compound return in I don't know how many years. So that means like, yeah, cumulative compound return of
100 years.
265 in 100 years. So yeah, it went up 265 million percent in that period. So it's like obviously nobody was 100 years ago buying this stock. But I mean, actually, maybe there is somebody that bought this stock and now has passed it on to the grandchildren and they still own it. And it shows you that it's a
Yeah,
business.
there's several people.
Right, yeah, bro. So for $1, you will have 2.65 million dollars. Like from $1 in 100 years, you made 2.65 million. And 100 years is not that
Every
crazy.
$1 invested.
Yeah, that's wild. I didn't even read that part when you first sent me the article. That is insane. Yeah,
Yeah.
yeah.
No,
Just
the whole thing is like nobody wants to own
wow.
a like if you tell people that, oh, I own the stock of a company that processes pork
Right, a
in the
bulk of
Midwest,
materials right here
right?
that we're seeing. They aggregate construction material like crushed rocks, concrete, cement, and then the second one in this list, 39 million percent. Out of $1, you would have made 400,000 for each dollar. Yeah, but keep going. Sorry.
Raised dollar.
Yeah.
Yeah. Like nobody, when you tell people that they should buy these companies, especially people that are not
Mm-hmm.
in the investing sphere, but obviously we're now at a point where like the last 4 years, everybody has access to stocks, everybody's
Mm-hmm.
talking about stocks, all this kind of stuff. And so if you tell these people that these are the companies that they should own because they're not easily disruptible,
Mm-hmm.
they'll laugh at you because they
Right.
don't want to own. And obviously, like if you're just going off, what most of these people in retail go off of is, oh, look at the last year. I think like right
Yeah.
now, one of the biggest things on Twitter, for instance, is about Bitcoin, right?
Yeah.
They're like they laugh at people that talk about buying bonds or buying the S&P and talk about like, look at the performance of the last 10 years, right? And it's like,
Yeah.
dude, that's great that if you did buy Bitcoin 10 years ago, you've managed to outperform the market handily in the 1 decade, right? That's fantastic.
Yeah.
The issue is that can you replicate that over the next 40 years so that when
Right.
you come close to retirement age, you actually have money to show for it, right? Because when you talk about just a decade or even 5 years or 1 year or whatever, you get to the point where you have to duplicate that over and over again
Mm.
where and all these other factors come into play like can you time it, right? Do you have exit and entry strategy? Like, all right, you bought Bitcoin for $1. What was the thought process behind buying it for $1? It's at
Mm.
$100,000 right now.
Should you
What's the
sell?
thought process
Right.
of holding it or selling it? Like how do you use that, right? Like
Mm-hmm.
because it's different. It's different what you're doing than owning a business. You're not an owner in a business. What you're trying to do is just make money off of somebody else. Somebody's gonna
Yeah.
come and buy it for more than you paid for it. And that's just a risky game. And usually, like statistics show that over the long term, it never works. And that's kind of why
Hmm.
most of these people end up underperforming the market.
Yeah, I think,
So,
and it speaks to
and
like,
that's a fact, right?
yeah, I think it's Warren Buffett. I mean, I know the investors have said like the idea of, yeah, like they would never invest in gold, therefore they would never invest in Bitcoin. It's not like, oh, they're just shunning Bitcoin because it's not a tech that is valuable or cool, or like in the sense like it is a nice asset, in the sense like it is an innovation of like a technological gold or whatever you want to call it. It's not that. It's precisely that. Even if it was the new gold, it doesn't matter, because it's like, how do you value it? Like you just value it on the basis that you expect somebody else to want it in some years, on just the basis of perception of people thinking that it's a valuable place to put your money in, but it doesn't have any it's not alive like a business is, right? So then it's no way for you, like Evan was saying, to know the entry or the exit point. It's more like you're just kind of trying to catch up to a trend that you might think is longer or shorter, and then that's really what the debate becomes, I think, with these people is it going to be a trend that lasts 100 years, or is it going to be a trend that lasts 10 years? But it's never something that they're looking at as something that will remain, because it cannot really, I mean, it remains in the sense of if people want it to just keep selling and buying it. But even in that case, right, to at what price would it remain, right? Because it can go up and down. People would still maybe use Bitcoin, but but I mean, I guess
Mhm.
I wonder, now thinking about it, like, wouldn't also like the idea of, like, if Bitcoin becomes, for example, something that is used for exchange, right? Like wouldn't that
Mhm.
also in some sense represent some type of value in itself?
Value.
Yeah, like an intrinsic value because it's part
Um,
of an economy. I don't
n-
know.
no, because it already is. So Bitcoin's already a currency,
Mm-hmm.
right?
Mm-hmm.
That is what it is categorically.
Right,
And
right,
then
right.
it's like kind of like you have to think about when you think about currencies, you think about the value in the currency comes from what's supporting the currency, the
Mm-hmm.
strength of the currency.
Mm-hmm.
So for America, that was for a long time our military. Well, I think it still is our military, right? Like
You wait for the dollar, right?
certain currencies for the dollar. Yeah, yeah, yeah.
Right.
Bitcoin, the thing that's kind of that gives it its strength is that its scarcity, right? And then
Hmm.
aside from that, what else would it be? Like
Right, like
its
that's why I'm saying
scarcity,
it would be
its
like a new
security.
gold, in the sense like it's a gold because it has scarcity, and then also the fact that it can be used as exchange. So how gold used to be before paper money. So I guess that's what people that
Yeah,
love
and its
Bitcoin
security.
see in terms of
Mhm.
value. That's what supports it. But again, yeah, it's like it goes back to, even if, I mean, I guess, yeah, the fact that it's scarce, right, and people can buy it and
You can
hold it.
figure it out. Listen,
Yeah, but
people online have kind of realized that like
mhm.
Bitcoin tracks the M2 money supply, which is
Oh,
just
really?
the international monetary supply by a factor of like 3 months or something, which makes sense, right? Essentially, like because Bitcoin is like kind of in a gray area of is it a risk equity or is it a currency? It
Oh, like you're
oscillates
saying,
between that,
right?
and
I
so
mean, it does make sense, because if it's a place where people put their money to store, right? If there is more money moving around, like, because the global liquidity, the M2 just
exactly,
measures like the amount of money that is moving around, right? Like kind of like the amount of bills that are in the
exactly,
streets, right?
yeah.
Right. So if
It's
there's
that
more
concept
bills,
of like the velocity of money, which I never really understood
oh,
too well, but
yeah, velocity. Right. Yeah, I forget now. I was about to say, I think I know what it is,
it's
because
hard
like
to,
it
yeah,
recalls
I
from
never really
CFA,
understood it.
but yeah.
Even the CFA stuff, yeah,
Yeah,
it's very
yeah. Maybe
confusing.
if you come me closer to the
But
test, I
essentially,
will be able
yeah,
to give you an answer. But yeah, velocity of money will be like kind of like, yeah, how the money moves through the economy. But yeah, but why was it velocity? Like how fast propagates? But I never thought about this though, in the sense of that the price of Bitcoin might be very well affected by inflation, right? In that sense, it's like, but if because there's more money out there and people have that money available, and there's like some of them can put it aside to put it inside of Bitcoin, being that the new gold, that is what
yeah,
supports the price at the moment. The fact that the amount of dollars that are being printed is higher, and that kind of inflation is being kind of solidified in the price of Bitcoin or any other asset, right? Because the same thing with equities going up with inflation, right? Or real estate prices going up with inflation.
everything, even
Mm.
gold goes up with
Right, right.
inflation.
Even gold, right? I mean,
Inflation raises
yes,
all
yes.
assets,
Yeah, yes, yeah, that
because it
makes
weakens the
sense.
value of the dollar.
Yes, yes, yes. Because everything just goes to this. Yeah, even look at this. Oh wow, the gold price chart is like very similar to the Bitcoin. I mean, yeah, just yeah, it goes back to that. It's like Bitcoin is in many senses the substitute of gold, which it could be. By some people will say, oh, that is the argument for buying Bitcoin, but actually that could be also the counter argument of why not buy Bitcoin because you don't know, or I mean, the reason for the price of gold or Bitcoin to change is not dependent on Bitcoin or gold, but dependent on the economy, right? Like it
Mm,
depends on how
yeah,
many, like the people that, yeah, I was just looking at that graph. I had it
global,
open.
the global economy. Yeah.
Yeah, the M2 graph that you just sent. Yeah, I had it open a second ago.
Hmm.
Yeah, it is interesting to see that. And it makes sense. I never thought about it like that. That is really the value comes, like you said, a value of a currency comes from the support. And the support is really it's a currency. So it's like it's gonna depend on other currencies. It's gonna depend on the wealth of the economy and the people that have the money. So there's nothing that you can analyze apart from the economy itself. Yeah. Like Bitcoin will tank when people need the money to survive. Because it's a store of wealth.
Exactly.
Ah,
Yeah.
right,
No,
right,
no,
right.
no, no.
No?
Yeah, the money. Yeah, yeah, but like Bitcoin's value will go down because the total monetary supply will go down. Not
Got
because
it.
people need the money. Like, people can still spend with Bitcoin. It's a currency, right? It's not that what you just described is the reason stocks or real estate or anything else will go down.
But wait,
Bitcoin, because it's also a
uh-huh.
currency, will go down because just the
But
money supply will go down.
but wait a second, because if you, I get the money supply. Like if the money supply goes down, obviously it would also go down because that's supporting the purchase of new one, right? But I'm also saying if
Mhm.
the people that are holding the Bitcoin, when they exchange it for goods, right? When they buy fruit or whatever, if they can do that, well, I mean, they will first go into dollar to buy the fruit, but whatever, they have to sell the
Not
Bitcoin, and that's what.
necessarily. You can exchange Bitcoin for stuff, dude.
Whatever. Okay, so but you when you're doing that, you're selling Bitcoin for stuff. You make an exchange in which you
Yeah.
gotta get your
Yeah,
Bitcoin
yeah.
out of. Oh, I guess no. I know. I see what you mean. You're not really selling the Bitcoin because you're passing the Bitcoin to somebody else, right?
Yeah, but the strength is
Yeah.
going down, right? Because the money supply is going down.
Right.
The value of Bitcoin isn't going down. What's happening is the relative strength of Bitcoin compared to the dollar is changing.
Yes, because there's less dollars, so then people would need to sell the Bitcoins to acquire
There's
some of those
less
dollars.
money
Right?
in general.
Yeah, like yeah, that's
Yeah,
less money. So
the
more
money supply,
Bitcoin.
it's complicated, dude. We're
No, I
kind of
get it.
going into
Right,
economics in a
right,
way that's
yeah.
very complex, dude. Like, I think people economics is such an art form. Like, it's kind of like philosophy, you know?
Yeah,
Like,
yeah.
it's
It's not a
I
science.
feel like
Yeah.
nobody really knows what they're doing
Yeah, no, but I
when
do
it
think
comes
like
to
what you're saying is
economics.
it has some I mean, obviously it has some insight, but like I do think there's something we can derive from that, which is the idea that the money supply being
One
the
second,
amount
dude.
of money that is coming into the market, and then if it's kind of how they say inflation, right? It's like more money chasing less goods, right? So in the same sense, if there's the same amount of Bitcoin chasing less dollars because people need the dollars for whatever reason, and there's less money supply, that would depreciate the strength of Bitcoin because people have to get rid of more Bitcoins to buy the same amount of dollars that they need for. And then also, if you have an inflationary pressure in which you need more dollars to buy the same amount of goods, or even more Bitcoin to buy the same amount of goods, they would deflate in that sense. But again, yeah, but that would depend again on the money supply. The same way the price of goods depends on the money supply. So yeah, going back to the like this whole full circle of why these assets that are not companies, they're not something. It's much harder to value them, and also it's a much riskier thing to do, even if they are going up and all that, because they depend on what we are saying, like economical principles, which is more of an art than a science, because it's kind of trying to measure what the whole community of people, like in a country or in the world, are gonna do about their own individual decisions in their personal economic decisions. I don't know that I've seen any place that accepts Bitcoin as payment. Value of paper money or currency of value in general. Value of currency or currency
No,
of
there are
value.
places that accept Bitcoin.
Yeah, yeah. I mean, but I mean, I get his point that it's not like a white. It's not like you can buy fruit with
No,
Bitcoin.
it's not common at all, yeah. It's
Right.
not common. And most likely, like, over time it's not gonna catch on that way because,
Hmm.
like, obviously now payment networks have caught up. Like, we have things like Zelle and like
Yeah.
all this kind of stuff that transfers money without fees.
Hmm.
So yeah, that part of the thesis is definitely weak, but the part of the thesis of Bitcoin where it's like a digital gold is kind of strong.
Yeah, I agree. But I also think that because of that, like that's what I've told people in the past too, and I continue to believe it, even though I see how it's still like when I look at the price of Bitcoin, like it does make me doubt. But again, I don't know if I'm just being, I mean, probably in a large sense, I'm just being doubting because of the price alone. But I'm saying like even if it's the digital, like the case that Bitcoin is the new gold would actually give you the right case to say that the same way that the government didn't allow gold to become its own thing and they took control of it, they'll do the same with Bitcoin. I mean, they're already thinking of doing their own cryptocurrencies and stuff. It's like if it's something that the whole value that you're saying it's important is that you can circumvent government in the sense that you can create your own economy and stuff. Precisely that is what makes it not a good investment because governments will not let that happen. They will curtail the use of Bitcoin one way or another. And it's like, oh, but you can get around it because you know how they are actually going to control it. They will because they can just kind of require any type of any. They can catch you at the entry point or at the exit point and they're not allowed to be traded or to for you to buy goods or you need to and you eventually need the dollars to pay your taxes and things like that. So that to me is the main risk I see in Bitcoin. It's like I'm not saying the technology is not capable of being gold. It's like look what happened to gold. The government took control of it because they saw that. I mean, they would probably use different techniques than they did with gold because gold was like the excuse was like, well, if you keep it with us, people will not take it from you at your house. But they can actually kind of the same argument. And they're like, oh, if you have it in your own wallet, that you are at risk of being robbed by some hacker or something. And I'm like, I don't know, but I don't know enough about the technology. But I do think the risk is more that it's like if it's so powerful and so great that it can circumvent government, then government will curtail it. But yeah,
Yeah.
again,
And then that kind of is a good point of like it's you can view something like I'll give you a perfect example. I don't
okay,
own any Bitcoin, right?
okay,
I think it's probably like the most important invention. Like it has the potential to be the most important invention of the last 100 years, right?
yeah,
And so if I shared that, if that's how I thought about it, why wouldn't I be buying Bitcoin like hand over fist?
right,
And the reality is because of what you're saying, like all the inherent risks of
mm-hmm.
something like that. You know what I mean?
Right, yeah,
So
yeah, like
you
it's
have to
like.
separate yourself from this
Mhm.
kind of thing when you're doing the investment. Actually, you should talk about Palantir. Like
Mhm. Yeah.
for the people in the chat, like Gabe is like the biggest fan
Yeah, I
of that
love
company.
Palantir. Yeah. I just love because it's
You
like
know?
the way they approach the technology that they build. And like beside the control that they have on like this big government contracts for defense and things like that, is the way they approach technology and software that I think is the new way of making software that is so revolutionary. And the reason Evan brings it up too is because if you look at the stock price of Palantir, it's not something you should buy. But also, first, I want to address a question here from Johnny Sons. He was saying if we own any crypto or Bitcoin. I think Evan was saying he doesn't. I don't own personal crypto or Bitcoin. But it's funny because we both believe that Bitcoin is a very interesting innovation technologically and stuff, but we don't. We just see the fact of both that it's really hard to measure its intrinsic value because it depends on economic things, and the other reason being the huge risk of government intervention because of its precisely because of its powerful features technologically. But yeah, look, let me show you
Yeah.
guys Palantir in terms of like this is a company that is
No way.
417. Oh, sorry, what?
This guy's name is Johnny what?
No, his name is Zons on here, but his actual name is Johnny. I know because I had him.
Johnny, yeah.
I had him on the
There's
show on Divinely Human. But yeah, what?
okay. There's no way to figure out, like when I buy a stock, right? I understand the company before I even buy the stock, right? So before I
Hmm.
buy the stock, I look at the company without looking at the price of the stock and I say, what would I pay for this company, right?
Hmm.
And that's done by looking at the output, like what
Hmm.
multiple of the output are you willing to pay based on things like industry comparisons, the relative growth in the revenue of the company, like how's the company growing, all this kind of stuff. So before I even know what the price of the stock is,
Hmm.
I have an idea of what I think the stock is worth, right? So
Right.
if I think, for instance, that like if we now we shouldn't use Bitcoin. If we look at any company, I say the company is worth $100, right?
Yeah.
If the stock is trading at less than $100, that for me means that I should buy it, right? And then it
Right.
also furthermore means that if in the next day, like if I buy the stock one day for $50 If the
Mhm.
next day it's worth 100 and none of the fundamentals of the company have changed, I would sell it, right? Because every dollar over 100
Right.
suddenly means that it's not a good deal anymore, right?
Yeah, yeah,
That it's worth more than I think it is. It's trading at a more expensive valuation than I have. And so I can't do that with Bitcoin, unfortunately. So anytime I would
no,
want to buy Bitcoin, I'd have to use things like, relative strength. Like
yeah,
I'd have to look at charts, which
yeah.
if you do any financial researching, you'll come to find it's like horoscopes, but for
Yeah.
men, you know what I
Look,
mean?
and
Like
it's
they just kind
actually
of look at squiggly lines.
and Cheese is kind of talking of that, and actually, what Johnny too is saying, I think Bitcoin explicitly goes against the ethos of an investor. It's all for out hackers, it's for the rebels. I think I've seen investors talk about it, and they just don't get the ethos. It's not an investment vehicle, exactly, because it's kind of like a currency. And then even Chiso is saying here,
It's a
my
currency, yeah.
my
Yeah, and it
brother
has great value in that, yeah.
in that, but yeah, but it has to be approached like that. It's not an investment vehicle. Chiso saying, my brother-in-law is deeply interested in watching the crypto industry, but then he follows on with, he's made several $1,000s by investing lots of bit money recently, meme coin investments, maybe not investment, but trading. Yeah, that's exactly kind of the point that we're making. It's like, it's not, you cannot make money from these things through investing because you're not really investing in anything. What you're doing is trading. You're buying something and then you're
Yeah.
trying to buy it at a low price to sell it at a higher price, and what you're using to measure that is the interest of people. So you either look at the charts as a
Hmm.
way to see, kind of measure, okay, people usually are interested at these prices, and then they get disinterested at these prices. Or you're like, oh, wait, the economy and this, there's a support for people that like there's money out there that would chase this good. So that's what you're doing. You're trading. You just like trading, even in the sense that what we were looking at the East India Company was doing. They were buying things that they knew people wanted at a price that was lower, and then making an effort to get them to those people. Now with technology and stuff, you don't have to do the intermediary step. But what you're doing is basically that you're buying it because you expect people to want it later at a higher price. So that is an investment, like how Johnny was saying. It's just trading. You just, and that doesn't mean you cannot make money trading. It's just it's a different type of skill set, and it's a very active skill set too, compared to in the
And
sense like
by the
you.
way,
Sorry, yeah. Uh-huh.
statistics would show that over the long term, you will not make money trading, no matter what it is, So
Yeah, sure. I mean,
like
uh-huh.
the thing about like for
Uh,
instance, he said his brother-in-law
right.
or his
Yeah, yeah.
what did he say? His
Brother-in-law, I
brother-in-law.
think he said, yeah. Yeah,
Like
brother-in-law.
it's easy to hit. It's like saying like like imagine it as if you are going to a casino and
Right.
going to a roulette table and putting all your money on red, right?
Yeah.
You put your money on red. Red comes. Congratulations, you made 100% on your money. You have 100% return, right? In five
Yeah.
seconds, right?
Yeah.
Now it's the same thing with Bitcoin. You bought Bitcoin low, you sold it high. Great.
Mm-hmm.
Now you have to do it again, right? So now you have to go back to the roulette, put your money back on red, and hope that it hits again, right? And then the compounding version of that over many years would be hitting red consecutively like 100 times, right? Which is genuinely impossible. And then everybody can have a hunch. Like the same way that you can have a hunch about Bitcoin, you'd be like, oh my God, Bitcoin is low. It's the same way that a gambler at a roulette table can be like, oh, dude, it's been black. It's landed on black 7 out of the last 10 times. That means that red is due, right? Unfortunately, that is what's the word for it? That they like a mental fallacy or what do they
Yeah.
call that? Like
But yeah, okay.
it's like a gambler's fallacy or whatever.
Yeah, but I do have a pushback on that. It's like I do, because you say I was statistically, it's like, yeah, but statistically, the thing is that it always looks at the aggregate. And again, I'm not advocating, obviously, I'm not advocating for trading. This is like, I also think that it's not a good use of your time, and it depends a lot on things that you cannot control. But at the same time, I do think there are people that can be really good at trading. And it's like, it's just, if you look at the aggregate, you're not going to be that guy. Like, it's just like the likelihood that you are good at that, it just requires a certain level of luck and emotional stability and things that it's just too hard to pull off. And then even if you do, like kind of being like a poker champion, it's like you can be a poker champion,
Two
but
percent, two
uh,
percent of only 2% of traders
uh-huh.
make it to the 10-year mark and are profitable.
That's what I mean. Like it's kind of like you're playing really against the odds. So yeah, it's like statistically, it's a really bad idea. But I'm saying that doesn't take away from those 2% people. Like I do think there's skill to train. Like I used to think there's no skill to train. Like it's just people kind of complete fallacy. Like it's just full roulette, but I do think it's
No,
a
it
little
is
bit
still.
closer to poker. Like I do think it's there's a
But
like
you need
the
like informational advantage,
yes, yeah,
which
things
is
like that. Yeah,
extremely
like that's
difficult.
why like
You
big
need to
banks
like
that
invest
trade,
money.
yeah, they have a bunch of things that they take to that, and they have those crackheads just with 7 screens, and then they have cables that are closest to the market. Yeah, they just have to take those little
Exactly.
inches. Yeah, 100%. Okay, here, sorry, we got some messages here in the chat. My pushback, I think it's not accurate to approach crypto as anything related to the stock models. It's not made for that. Yeah, right. That's what we were saying. Most people own fiat not because of forex measurements. It's meant to be a practical store of value, right? Investors can only glean the value after consumers put in the value. Investors can only glean the value after consumers put in the value. You mean of specifically Bitcoin or any type of currency, or you mean consumers of a company? Like I said earlier, I was thinking of a bank with risk investment. The question is not whether I own Bitcoin or Nvidia. It's how much fiat USD I own versus Bitcoin. Right, exactly, because they're currencies. Yeah, yeah. So we talked about that. But I
Yeah.
saw Chizo said
Yeah.
something else that I wanted to address. That's why I was reading through this. I disagree with
USD
it.
has a price too, by the way. Like just because like you don't own a
Mhm.
certain amount of fiat. Like fiat itself, the price of it changes constantly, right? Bitcoin, the
Right,
price that
compared
you
to other
see
ones, though,
is
it's always
its price
comparative.
relative to fiat.
Yeah.
Fiat's price is relative to a basket of goods that you can buy with each
Ah,
individual dot. Well, with
right,
so the
right,
price of
right.
a dollar changes every day, and
Yeah,
throughout
yeah.
history, the
Like, what
price
is
of a
that?
dollar
The
has actually
MacBook
gone
in?
down.
What is the Mac Burger Index or whatever is that called? The Mac? No, what's that called? The Big
Yeah,
Mac.
the Big
Big
Mac
Mac.
index or whatever. Yeah,
Yeah,
that's
price.
one of
Yeah.
the things you can use. But essentially, like when people say like the dollar has lost 2% of its value every year for the last 100 years, like that's true. Just because the value of it is one doesn't mean that the price of the dollar is one. You know what I mean? The price of the dollar fluctuates every day. So every currency is just a means of exchange. It's not like I don't know, it's not like stable or anything like so when you're comparing the price of Bitcoin, like if one Bitcoin is $100,000, but $100,000 only buys you one burger, then the price of of Bitcoin is actually low compared to today. You know what I'm saying? Like I don't know if I'm really phrasing it well, but
Wait,
I
say
don't
it
know.
again. Sorry, I
Yeah.
was distracted trying to find out the Big Mac thing. But
No, like I'm just saying, like the price of you're looking at the price of the cryptocurrency compared to the price of fiat, right? But the price of fiat is also constantly changing, right? So like
yeah,
if Bitcoin trades at $100,000 today, and then in 10 years it goes to 1 million,
yeah,
but 100,000 today, buys you
yeah,
like a
yeah,
car, like a really nice car, but a
yeah,
million dollars 10 years from now buys you a burger,
yeah. Like you also
then
need to
it's
adjust
not.
for that. Yeah, right.
Yeah.
Of even the value
Currencies
of
are
the
just
coin.
floating. They're just means of exchange, basically. Like
Yeah. No, that
so,
100%.
everybody that's chasing that return is chasing it relative to the dollar now, but then the dollar is also constantly changing. It's all very confusing, really, and
Yeah.
impossible to measure.
Yeah, that's why it's like
Unless
it's not
you're autistic.
investment. It's unless you're this. But Cheese was asking, what's day trading? Then I'm going. So day trading, at least from my understanding, is basically when you are buying and selling stocks, or I mean, it doesn't even have to be stocks. It could be futures of oil, whatever. Think investment
Could be
vehicles, like
bananas.
things. Yeah, it could be anything in the public markets when you're buying and selling them within the same day. That's day trading. Like if I buy and then I sell it in 2 days or 3 days, that wouldn't be considered day trading, although it's close enough. Day trading are people that like get on their computer and they buy at 9 a.m. or 9:30 a.m. They're buying this stock for some reason and then they sell it a few hours later before the day closes. So they're very active traders. It's something that has happened recently
BRB.
because of yeah, okay, no worries, because of the advancement in technology that allows people to buy and sell like that quickly. It used to be that you needed to call somebody and it's like to buy and sell stock there was somebody, a person. I mean, there's still people in the stock exchange that do that, but it's all electronic at this point. So that's why it allows to this new breed of traders. That's why also the idea of a trader, if you look back of where it comes from, it's just the same thing as the India company. It was people that will go to a city, buy whatever thing was not accessible in some other city, move that good there, and then sell it. And knowing how to kind of find that arbitrage of where is it cheap, that then I can move it to the place that is expensive. And now the thing is like things are so digitalized, especially if you're a trader in the stock market, that what is understood now as trading is following the same principle, but you don't need to do the intermediary work. So it's much more about speculation. It's much more about the timing of things. It's much more about I'm buying something that now people don't value because they will value it later. And then when you're doing specifically day trading, is more of like usually around this time or usually because of this news, people will now want something that other people will come into the market to want in a few hours. Or and again, and then it's even a self-fulfilling prophecy because if you have so many people day trading, then they create a pattern. So then they become like a herd. So then whoever is able to kind of sway the herd one way or another can take advantage of all that volume of money moving. So it just becomes a completely different game. Back testing your
This
okay,
gives you
Evan.
a cool,
Yeah, I just saw here.
this
Uh
is a cool chart. So basically, it's a back test of the returns of Bitcoin over the last 13 years.
huh.
And I just thought it was cool that when you change the currency, the actual compounded annual growth rate changes, which is
Oh,
kind of what
like
I was
if
talking about before.
yeah, I mean it's not. Oh yeah, no, it's standard deviation. Yeah, compound growth rate in dollars 100%, years 109. Yeah, I mean it's not a huge change, but I see what you mean that there is a change.
It's only
Yeah.
been 10 years, bro. It's only been 10 years. Like if you give it, you know what I mean? If
Yeah.
you push it
But
out
would
to
it?
100
But that.
years.
But this, in any case, would like still man the argument for Bitcoin, instance, right? If you think that the U.S. dollar is gonna go down in value, though, right? Like that would make Bitcoin go up in price just on the basis that the U.S. dollar. Yeah, but it's just exactly we go back. This is foreign exchange. You're just analyzing now currencies and figuring out what is stronger. Some
Yeah.
digital state, like that's why it's also like I feel like that's the risk. It's like Bitcoin would be representing a digital state like how that there's a guy that really I think he's actually a professor in Colombia and he supports Bitcoin and he has a book called The Network State. And actually, I don't think he's a professor at Columbia, but whatever. He has this book called The Network State, and he talks about Bitcoin being like this perfect instrument to create an independent state in which its economy is using Bitcoin, and people can be in different places of the world. And it's like, yeah, that sounds very good in theory, but I'm saying it's like that the
Mhm.
same reason that the U.S. or a country will go to war with another country because of a matter of currency, because inflation is what's created wars in civilizations for many since the beginning of civilization. It's just like in different empires, it's like the emperor spent a lot, the currency devalued, and then they're like, how do we solve this? We just conquer another country. So the government is not going to let this independent network state that is backed or is represented by its currency being Bitcoin just go away like that. If the dollar actually starts to weaken because of the debts that they have to like face, or the euro or things like that, they will use force to take advantage of all that wealth that is stored in Bitcoin. The same way they could take advantage of another country. So that's kind of what I see, which again is a bit bombastic, and I don't know what I'm talking about at the end of the day because it's complex issues. But it is something that I find daunting. That is like it's just people I think take a lot of security in Bitcoin, like if it's in some type of independent realm that nobody can take control of. But I don't know.
Yeah. Well, that's what I was kind of saying before is like that's why I think that like it really is just like a fantastic invention. And I think it's
Mm-hmm.
like the perfectly crafted currency. Like it's a perfect currency.
Mm-hmm.
The issue is that, like you said, like in order for it to actually be successful as that and to actually help the world, like the way that any technology
Right.
transforms the world, the way for Bitcoin to transform the world would have to be that every country in the world unanimously agrees to start transacting in Bitcoin. All transactions have to be in Bitcoin, and then
Yeah.
it's truly valuable, you know. But unfortunately now it's like it's kind of like
Yeah.
for the internet, you know what I mean? For the
Yeah.
internet, for a lot of like shady stuff. And I think, I mean, as we go forward, I think the shady stuff is kind of going to go away. I think most of our
Really?
generation.
I don't think so. I
Yeah,
think.
yeah, I really do.
Yeah.
I really do because I think, I mean, obviously the shady stuff will always be there. That's just
Right.
like
Okay.
the
Okay.
nature of shady stuff, right? Like it's no matter what happens. But
Right.
I see now that like most of the younger generation that kind of like, I mean, at least for the people that make money off the internet,
Mm-hmm.
they almost like primarily transact with cryptocurrency, and they also get paid in cryptocurrency, like all this
Right.
kind of stuff. You know what I mean? So as a means of exchange and everything, I think it'll be good, and I think it'll have its place. It's just that it's never going to be big enough to where you know it's the primary currency. But
Yeah.
anyway, we're getting off
We
track,
are.
dude.
We
I
are.
think
I was about to bring it back, but then we have one last question, I guess, from Johnny. That
yeah.
He's saying why, but I don't know what he means with why to what. Not all transactions need to be in Bitcoin. It has a fairly large
No, he's saying
margin of
like,
error.
yeah, why I think that. No, no, I'm not
Huh.
saying. I'm saying like the like I think if Bitcoin, if everybody unanimously decided to start using Bitcoin,
Hmm.
it would be a net good, a net positive for the entire world. I'm not saying like it doesn't mean anything. I'm just saying that because it's such a good currency, that's what needs to happen for it to become the actual only
Yeah, I just
currency.
think it's like what you said. It's like it needs the backing of actual power. Like it's like it doesn't have any actual power. It's like the reason people now use it is the power comes from it. The fact that's why I'm saying like the shady stuff. It's like even if it's not shady as in criminal, it's still it's an underlying economy that the governments are allowing as long as it doesn't really bother them. And it's like the thing that will give it actual stability is the same thing that gives stability to any other currency, which is an actual military behind it, like an economy, like a group of people that by law use this as an
No,
exchange.
it has that, it has that. The inherent security of the blockchain that it exists on is kind of like akin to the military power that backs the dollar. It's similar. It's
Sure.
because the military power is the same thing. It's not about how much we can attack. It's like nobody's gonna attack us. Like we're not gonna come.
But
We're
you're talking
safe,
more no,
basically.
but like it's like the blockchain thing, at least from my understanding, is more of like it secures the register. It's just telling you who owns the money or whatever. Like it's not like it's just a kind of against the corruption of it, against I guess like somebody
No.
some. But it doesn't. What I'm saying with
Yes.
power is the idea that somebody like if there's no country that accepts the Bitcoin as its currency, right? And there are countries that accept it, but if every country banned Bitcoin as a means of exchange, then it would lose all its
hmm
power, like the little bit that it has. That's what I mean. Like,
No, because you can't ban Bitcoin as a means of exchange, bro.
what do you mean you can't?
It's
Why not?
impossible because
How?
Bitcoin is exchanged on a peer-to-peer level.
Yeah. So you kind of control the peer-to-peer interactions. Like,
No,
how
you
not?
can't
If I have, how not?
because
If I don't
because
allow.
all
Uh-huh.
you don't exchange Bitcoin like it's like if you do it the right way. If you self-custody
Okay.
the
Yeah.
Bitcoin,
Yeah.
then it's just a matter of exchanging a physical thing with another person. I mean, I guess yeah, you can make that illegal, but it's not.
That's
It
what
can't,
I'm
I don't think it
saying.
was.
I'm not saying it's gonna
Yeah,
happen, but I'm
yeah.
saying like that. That's what I'm like. It is a
No, yeah, but I'm
currency.
saying
Like,
even if it does have, even if it were to happen, it's like it's kind of like how they outlawed weed, but then everybody still smokes weed. You know what I mean?
yeah, sure, yes.
Like
Only
it
that
won't
this is
stop
this is that
Bitcoin.
actually has a digital ledger that, as you said, is unalterable, so they can track precisely who and where they're trading weed. Like it's a public chain. That like you know what I'm saying? Like it's like it would still happen the shady stuff because it would be people that create shells and ways to masquerade who they are in the blockchain. But eventually they have to exit that because if you don't allow Bitcoin to become the currency that you use to exchange for goods, you're gonna have to bring it back to dollars at some point and they can catch you there. But whatever, again, I think
Yeah. Yeah. Fair enough.
this whole thing brings back to what we were talking about. It's like these disruptive technologies that actually jeopardize any type of investment. And why, if you focus it like the thing that we started the whole conversation on being DeepSeek, it's like DeepSeek or Bitcoin and all these things are things that happen out of our control in the sense like we don't it would be like you have to be so much in the weeds, and even in that case like even the people that worked at OpenAI and stuff, they didn't expect a DeepSeek event to happen, but it happened. So then what we were looking at here earlier with the 10 best performing stocks of these companies that are boring, like as we said, first one is a tobacco company, then Vulcan Materials, a cement making company, then we have Kansas City Southern, a railroad company, General Dynamics with its aerospace and defense, and then Boeing. And then you compare it to companies that are very interesting, they have great technology, like I was saying, Palantir or Google or OpenAI or now I guess DeepSeek or Nvidia. And it's like the risk is really high because they can change on the basis of technology. They don't change on the basis of like for something like a tobacco company to be disrupted or a cement company to be disrupted. It's like for some like people who have to stop smoking or people who have to stop making buildings out of cement. So, but now for people
Yeah.
to change their AI models, it's like how are you even gonna know something like that it's gonna happen? And that's I guess what Evan and I, or especially Evan, got him thinking the event of DeepSeek, of the idea that when you invest, you shouldn't be looking for the next cool big thing, but you should be looking for things that cannot change as easily and things that can stand the test of
Yeah.
time.
Good quality companies that are not disruptible
over the long term will always outperform any company that's, that
Mm-hmm.
exists in an industry that's highly disruptive, that's growing rapidly and is very new and everything. And it's like even like it doesn't even the industry itself doesn't even need to be disrupted, which
Mm-hmm.
kind of goes to the second point where it's like if you are if something is in growing into a mania, right?
Mm-hmm.
Like for instance, Intel was the biggest company. Like before Nvidia and before all the companies of modern day, like Netflix, Amazon, all these companies, the first big technological revolution was
Yeah,
the
right.
the dot-com bubble that happened in the early 2000s, right?
Right. Uh-huh.
And so Intel, if you were just a person like a retail investor, like we go back to that same concept of like you don't really understand finance, but you want to own stocks because you know that it's the way to grow your wealth over time and everything.
Right.
In that time, if you were to have started investing in that time,
Yeah.
everybody, your taxi driver, your dentist, the guy that shines your shoes, would be telling you about Intel, right? Because Intel had grown so much or whatever.
Right.
If you had bought Intel, nothing happened to Intel. Like Intel as a company has continued to grow.
Right.
They haven't gone out of business or anything. But the problem is that you paid too much because
Mm-hmm.
of the mania. And so you over those however many years, you didn't even make any money,
Mm.
right?
Yeah.
And that's the biggest issue. And then that's what people talk about all this kind of stuff in the modern day, and it's kind of a trap, right? Like nobody
Mm-hmm.
same thing back in the day. If Intel, like somebody told you like or even like a gas company like what were one of the gas companies on the article?
Yeah, let me check.
Was there
Gas
any?
companies. I mean, we have here
Yeah, like an
Boeing,
energy
General
company.
Dynamics, International Business, Eaton Company, Power Management. Uh, no, but this is like chips on that electrical company. S&P Global, Coca-Cola,
Uh,
PepsiCo. No, we don't have any gas ones. Maybe you talk. No,
oh,
you're
that's
talking about
interesting.
the different article. Maybe at the ones that you sent.
No, I thought there were no, I thought there would be at least
Pico.
one.
Oh, energy ones.
I thought there would be at least one.
No,
Here
actually,
there is, right?
in
Here
the
there is.
in the top performers here. I don't know what some of them are to be honest.
Yeah, right
TPL.
there, right there.
Where?
Oh
Which
yeah,
one?
there's no energy companies. Damn, that's interesting. There's also energy companies were also the biggest companies. That's also the kind of the same point. Like energy companies were the biggest companies in the S&P
Yeah, in the 80s
at
and
a
things like
certain
that.
point in time. Yeah, and so if you just thought about the performance of those companies, right? Because if you say to yourself, "Oh, how does a company become the biggest company in America?" Obviously, it grows in value. So if you
Mm-hmm.
own the stock of that company, your return should be enormous, right? But then here again, kind of the same thing is shown, like the biggest companies in the world are oftentimes not producing. Oh, this company is an oil company. Yeah. Yeah,
Is
they're
it?
an oil
This is
exploration
specific.
company.
Okay, so yeah,
Yeah,
so
yeah.
so there you go. So that, yeah, I was also surprised to see what you were saying is like it's true. Like they kind of went up, but like they are big still. They have to be like energy is big. Yeah, it past 20 years, 30, 35.
All energy companies are
Yeah,
big. All energy companies are big. It's just that now they're smaller than they were.
right, right.
And if you asked anybody, they were the biggest companies in the S&P at a point in time. So like you would think that by owning those companies, you would have, your money would have grown. But the reality is that it's oftentimes the simple companies in the industries that are not easily disruptable that
Yeah,
tend
look
to
at this.
grow
It's like it doesn't
steadily over
matter.
time.
Yeah, like it's like TPL, right? It's like, oh, look, it's like, oh, you look at a year or whatever, it's like it has gone down or it hasn't gone up as much as the market. But like, you look at the company in itself, it's inception. It's just, yeah. In general, it's like, we go back to that. It's like, if you, I mean, what you were saying earlier of like, you're paying for the output. So the moment you stop thinking of, I'm buying a company on the basis of, let me figure out what the best next company is. And you look at it more of like, a place where you're parking your money, like you're
Yeah.
selecting a savings
Which is
account.
how, by the way, that's how what you just said is how a lot of people think about stocks. And it's like also a terminology, like people use that term constantly, like the next
What
big
term?
thing,
Yeah, the
like
next big thing. Yeah, exactly. They're trying to find.
invest in the next big
Yeah,
thing.
like they're buying. Yeah, they think they're buying the company in the sense because at the end of the day, it's also like the psychology of it. At the end of this, because people want to say that they invested in something. Obviously, they want to make money, but I think there's also a stronger sense of people just wanting to get it right and say, "Look, I invested in this, and it has turned into this." Instead of saying,
Hmm.
let me look for a place, like let me look for a savings account that brings me a better return than a savings account. And then what is the
Yeah.
company out there in the stock market that provides me a dividend? Like we were looking before we started the stream to this one that we just talked about, right? This is Altria. We just said that in the last 100 years, this made you $2.65 million out of $1 for each dollar, right? And still, this is the money that it made you, right? It's the best performing stock. But you look at MO right now, you look at Altria today, and it's still cheap. Like you're paying 8 times the earnings that they make, and you'll be making, this is a dividend yield. This is basically the percentage. What is the dividend? How do you define dividend yield exactly? It's like, yeah, of the stock price, right? So the dividend,
The dividend divided by the stock price.
yeah, the dividend by the stock price. So basically, 8% of 52. Like this gives you each quarter. No, is it not? It's per year, right? Yeah. So each year it's giving you 52. Wait, it doesn't matter. I mean, what the actual dollar amount? It is basically like saying giving you
Yeah, it's about
8%.
$3.
Yeah, it's basically like this is imagine this is a savings account that is giving you 8% return. And it's like the best savings account that you can find on American Express or whatever, whichever one is the best right now. It has gone down because of interest rates to 4 or less than 4, 3.5, right? This is giving you consistently 8% of the money that you would pay. You put $50 into this savings account, and each year you're getting 8% back. And that's only on the dividend. Then you have the fact that because you're buying at a really low price of 8 times earnings, like even if earnings don't grow, the price of the stocks in general will kind of rise because the market rises because again the money supply and all of that. And then the fact that if the money supply and everything is growing, earnings are also growing. Whatever the case, even if it stays the same like level, you're already making 8%.
Earnings yield.
Change
You
it
can
to
think about it as like yield.
Yeah,
Even I'm saying the PE
Like,
ratio can also be thought of as
switch
a
it.
yield.
Yeah. Like running around. See, so that would be
12% or whatever it would be.
Yeah, like 1 divided by 8, right? It's actually 12.5%.
1 divided by 8.
Yeah,
Yeah,
it's
like 12.5% per year.
yeah, it goes back to that. It's kind of think about it like where
And
you're
dude,
parking your money.
look at the compounded return on the page before. Like look at the compounded return
I
over 100
know.
years.
I know. This is
It's exactly
16%.
12 and a half.
Oh,
exactly 12 and a half.
wait, where? This you mean?
Oh no, it's more.
No,
I
it's
thought it was
more.
12 and a half.
Yeah.
It's 16 and a half.
Yeah, but it's something like
which is a
that.
combination.
Exactly.
By the way, with no growth in a vacuum.
That's why, yeah.
It's just a combination of the dividend yield and the earnings yield.
Right,
like how
right.
much money is compounded back into the share price and how much money is given to the investors. You know what I mean? So
Mm-hmm.
that over the long term, that simple 16% return per year has outperformed the S&P,
Look at this.
has outperformed probably 99.99999% of every major fund in history,
Yeah.
and also like every stock apparently, right? Like over 100 years. So there was no better investment at any point in time over the last 100 years
Mm-hmm.
than Altria.
Mm-hmm.
And I don't
And it
think
was kind of
if you
clear.
ask any of your friends that know about stocks or invest in
Yeah,
stocks, if you
right.
ask any single one of them, they will not tell you that they made their money on Altria, and they won't tell you to buy Altria.
Yeah.
You know what I'm saying? So
And I think it goes back to the idea that it's the wrong question. It's not necessarily that it's the wrong answer. It's because nobody's asking that question. Everybody's asking what's the next big thing. And the answer to that question would never be Altria. Like it would never be like, what's the next big thing? Oh, just the tobacco company that everybody buys tobacco from. No, it isn't. That's true. But the thing is that that's
Exactly.
not the question that you should be asking. When you invest, you shouldn't be asking what's the next big thing to invest your money in. What you should be asking is what gives me the best compound interest at a safety of principle. Like what is something that is not gonna go out of business and pays me a good amount of money? What is the safest bank that is not a bank? Like you know, it's like
Exactly.
where do I park my money? And but yeah,
And by
this
the
is
way,
wild.
that's yeah, the way to like to make that like bulletproof pretty much is if you don't want to think in that way about individual stocks and non-destructible industries,
Right.
the original thing that's non-destructible would be the index. Because the S&P,
Right.
if you own an index fund, is undestructible if you think about it, because every company that gets disrupted will be replaced.
Mm-hmm.
And then if
Yeah, you're betting in the market. You're betting on America, basically.
You're betting on America, yeah. But if DeepSeek, if you owned Nvidia and then Nvidia goes down because DeepSeek is, disrupting it,
Right.
DeepSeek goes up in value. So now if you're an investor in Nvidia, you lost a bunch of money.
Right.
If you're an investor in DeepSeek, you made a bunch of money.
Right.
If you own the S&P, you still made a good amount of money because you owned both.
Yeah.
Right? You owned the one that grew to replace it. You know what I'm saying? And then over the long term, after DeepSeek, DeepSeek itself can get disrupted. So like if you own
Yeah.
DeepSeek, you made a lot of money in the short term, more than the market. over the long term, you still won't make more than the market,
Yeah.
right? You have to have, in order to beat the market, you have to have the ability to, if you were trying to find trends, to buy the thing that's disrupting every single time. And over the long term, I think it's very, very difficult, if not impossible, practically impossible.
Yeah. Yeah,
So
and I actually, yeah, I mean, I would have to rephrase what I said because it's really, you're not betting on America, you're just placing your money in America. Like you're just saying, this is a safe place for me to put the money that is gonna grow, like the economy of it. And now I understand a little bit more when Buffett was saying that because I was looking at it again as betting, as like, oh, America's gonna continue to be the biggest thing, but that's not when he says like, oh, if you think America's gonna be a good economy, you should put it in the index or in a company that's in America. It's basically saying, goes back to that. It's like is believing that the economy is strong enough that will be safe for your money. And then it will just grow on itself because, as you say, right, it
yeah,
gets balanced by the winners and losers, but you're just owning both. So yeah, you're betting
you
on.
always own everything. Yeah.
Yeah, yeah,
So you can never lose. And
right,
on
right,
top of that, like it's the productive. You're betting on the productive capacity of America,
right,
but
right,
you could just as easily bet on the productive capacity of the entire world because
right,
there are
right,
index funds that track every company in the whole world,
right, right,
right?
right,
So
right.
it's like if you ever get to the point where an investment in the entire world loses all value,
Yeah.
then you have bigger things to worry about than your
Yeah,
stock portfolio. You should be
yeah,
worried about having a nuclear fallout. You know what I
yeah,
mean? Like
yeah. If the whole world is just not growing, yeah, then we have bigger issues. Yeah.
exactly. So for everybody in chat and probably for anybody watching
Yeah.
that doesn't if you're a young professional or even like an older person that works
Mm-hmm.
you work a job
Yeah, you have
and you're
disposable
not in the
income.
financial industry,
Yeah.
right? The only thing you would ever need to do over the long term to make sure you sort yourself out
Right.
financially with investing is to just buy the index,
Yeah, let me see
right?
what the returns are actually for the S&P 500 in the last 100 years.
10% annualized.
10% annualized? Yeah, that's wow.
10% per year. Or like 8% maybe.
Well, I
No,
guess
just
this is
go
not what I'm looking for. Yeah, what do I have to
no,
find this?
just go S&P compounded 100-year return.
I mean, I could have just gone to ChatGPT and I said, yeah, there it is, 2.56.
Yeah,
This one's on top of
fair enough.
graphic, but yeah. Annualized
Yeah.
20-year
Makes sense.
annualized returns by asset class, but it's 20 years, but yeah, it's still. Oh, but yeah, this is kind of a good. Yeah, this kind of shows the idea of looking at it as a savings account. Where is the image? There we go. Like you just look at where you're gonna place your money. I mean, rates is also like the idea of real estate. These are real estate indexes, right? So invest instead of investing in all the companies, investing in like I guess all the
Yeah,
real estate.
those
But
are real estate trusts. Like they're like they own property pretty
yeah,
much.
like it would be like what I'm saying is like it would be like placing your money in real estate. But yeah, like the idea of this, right? If you have it in cash,
But
this is the
actually
money
the
that you're
20
making.
year it's the on top of the in one of the things that I sent you in Discord,
Mm-hmm.
the rates have outperformed in the last 20 years or between that time period 2001 to 2020, but if you look at the 100 years, it's actually one of
This
the
one
worst
maybe?
performing sectors, real
Did,
estate.
yeah,
Yeah.
here.
Yeah. Like if you look at real estate after between 1900 like what was it? No, this is not. Hold on. I think
Okay,
it's a
okay.
different thing that I didn't send you.
Here's a look at share
I'll
market
find it.
capitalization of each stock market now. Yeah, but now this is kind of like the percentage of the stock market that is put into, right? This is more showing, yeah, the share of the market that is going to different sectors, which is
Yeah,
wild.
here I got
I mean, I think it makes sense. Like when they look at this and it's like in the 1800s, it was finance. I feel like it's
you.
probably because these
Here,
finance
open
companies
this.
own the. Yeah, I'm opening it. Okay. These are the sectors, performance annualized, but wait, but in 20 years though, still, right? No, 10 years.
Yeah, yeah. Well, this is 14 years now, yeah. But it's still a good point in that like the real estate is the
10%.
real estate annualized? Yeah, real
This
estate
is real
annualized
estate, right?
10%. But like look in the you see what I'm saying? Like over 20 years it was
S&P
one of the
14%. Yeah. It's just that. It's the idea
yeah.
that like consistently, no matter what the events are, you're gonna get above 10% for your money by just placing it in the index. And then I guess you could go with a sector, but it doesn't even yeah, it's actually much easier to just do this. Just buy the market.
It's irrelevant, yeah.
What is this though? Inf like information technology? Yeah, right? Yeah. I mean, it
Yeah,
makes sense. The
there's like
last 10 years.
a key on the bottom.
There's a key on the bottom.
Oh. Yeah, what, right? Is it
So like,
here?
yeah, if you looked at your other thing that you had up, right?
Yeah.
Health, real estate was of the last 20 years the major outperformer.
Oh, are you talking about what I had? Like,
The one that you had open, yeah.
yeah, let me
No,
get
the
to
one that you
oh.
had open.
Yeah, I gotta find it. That's
The
all. This, right? Yeah.
yeah,
Yeah. In the last 20 years. Because it's gonna change.
this right
Exactly.
here.
It's gonna change. And
The
I
highest
bet.
was the rates. Wait, is
So,
this even an accurate
yeah,
chart,
this,
bro?
I mean, I don't know exactly what I'm looking. No, but I think it
So
makes sense.
specific.
2001 to 2020. Yeah, I don't see why not. Like, I mean, I don't see also why JP
Yeah,
Morgan is the
yeah.
source
The
also.
real
But
estate.
but I'm trying to understand what it says. But yeah, like, I think it makes sense because, again, and I'm sure if we go back to the 80s, up here we'll see more energy, like energy sector, because it just changes. Like, it just depends on whatever is the main technological thing that is moving the market at that time. But it is independent. If you don't want to worry about it, you just own the market and you don't got to worry about what sector is going to be. And then again, it goes back to, like, if you do more work, you can take more risk and then select individual companies. Like, then you would be smart enough to buy Altria specifically. Not even smart, like, you've done enough work to be confident in your bet in Altria. If you've done a little bit less work, you'll be confident in your bet in a sector. But at the end of the day, what you're betting on is not on the next big thing. You're just betting on the safety. Because if you look again, we're talking about this, like, in the 20 years, it's real estate. It's not the next big thing, bro. It's like everybody still needs houses. That's really what this is. Like,
Yep.
but yeah.
Yeah. So basically, you should make your life simple,
Yeah.
and on top of making your life simple, you'll actually outperform everybody, like even your buddy's brother-in-law that made 100K in crypto. You might not beat him in the short term, but trust me,
Right.
like if you give yourself time when you're looking back at it,
Yeah.
you'll feel a lot happier that you bought just the index or just a
Yeah.
boring company that makes a lot of money, you
Yeah.
know? So,
And it goes back to that, but the temptation is that you just want to know the next big thing so you can kind of say that you figured it out. And there's nothing like wrong with wanting to do that, like just feeling that speculative, like, you want to bet a little bit and be like, let me put my little. Sure, if you want to do that, but that's not investing. It's also like, again, you're losing money ultimately. Like, you can do it like the same way you might want to buy a lotto ticket, but like, look at it as an expense, or if you want to go to the casino or something. So it's the same way. If you want to just do a little bit of trading there because you find it fun, or if you want to put money into Nvidia or whatever, because yeah. And again, you can still do it in a smart way, the same way you can bet on horses in a smart way, but you still just you're just kind of spending money in something that you like to do. But if you're talking about like whether how to invest, then just look for companies that provide you a stable return, and that they're not gonna be going, oh yeah, there's a really low risk of them going away in the next 50 years, 100 years. And if you cannot find those, like if it's something that will require too much effort, then again, as Evan was saying, just buy the stock market. Because like that, you're confident enough to think that the stock market is not going to go away in 100 years. And again, if it is, then you have bigger problems to worry about. If the US,
exactly, you won't have to
if
worry
the
about
US
your
economy
returns, you know?
exactly is tanking. So, and yeah, that all you're doing there is outperforming what you would get in any savings account, and that it compounds. So
Hmm.
again, I mean, when
Yeah.
I was looking at the
You
$1
can,
thing,
yeah,
it's
like
wild.
yeah, like 100%. Like, listen, I do the same thing. Like anybody that has an interest in stocks, for
Right.
like more than just using it as a vehicle to try to build wealth over the long term, then you should allocate a certain amount of capital to it if that's what you really want, because it'll
Mm-hmm.
also make you better. Like,
Yeah.
trying things out in terms of that will make you better. I just think that like obviously everybody doesn't do like nobody does that. Nobody
Yeah.
uses that type of risk management in the beginning.
Mm-hmm.
They just want to own the stuff that they find interesting or that's going up a lot.
Yeah.
And yeah, you should really avoid that. I mean, I was not doing that for a while, and then once I got a little older and I had a little bit more money where it was kind of dangerous what I was doing,
Mm-hmm.
I started, investing a certain amount in the S&P, and then the way I see it is that the money that I have in the S&P is the money that I have confirmed when I retire. You know what I mean? Like
Yeah.
the total contributions, whereas everything else is like it's very risky.
Yeah. Yeah. Yeah.
So yeah.
Yeah. It's again. Yeah. It's just, if you want to take the risk, take the risk. But yeah, understand that you're not really invested there, and that, yeah, take into account what you're risking and for what. You know what I'm saying? But yeah,
Yeah.
it's just a
There's
different thing.
also paper money. Paper money is cool. I encourage everybody to start a paper money
What do you mean paper money?
account and then try to see if you can beat the S&P over maybe 1 year, two
Oh,
years,
paper
whatever.
money as yeah, like investing without actual
Yeah,
real
like
money. Yeah, yeah,
fake
fair.
fake money. Yeah, like yeah. There's a ton of. I think even like traditional brokerages have paper money
I
capabilities. Like I
think so.
think Schwab has it.
Yeah, yeah, but
So
I don't know. I feel yeah, I mean sure, but I just feel like every time I hear that, I feel like people either I don't know. It's kind of like I feel like it's a catch-22. It's like if you do it with paper money, you don't take it as seriously, and if you do it without paper money, you don't. I mean, it's kind of like you don't take it as seriously either, or like you know what I'm saying? Like it's kind of
yeah,
like
but
in
at
one of
least you
them, the
aren't taking
pressure
it
the pressure is
seriously.
so high because it's real money that you fall for the emotional traps, and the other one there's no pressure at all, so you don't fall for the emotional traps. But you just it doesn't matter, you know what I'm saying? Like what you create
Hmm.
paper money and you're like, okay, that makes you independent of the idea of losing or gaining money, so that you make smart decisions, but they don't matter because it's not. And then when you actually are like, oh, I know how to do this with paper money, and then you move on to real money, but I don't know. But maybe no. I mean, everything is good in terms of if it's
Nah.
practice.
If you're
So
starting bare, if you're bare, if you don't know anything
yeah,
and you're just starting,
yeah,
it doesn't matter if you because
yeah, yeah.
you're not even knowing how to
Yeah, yeah, no,
categorize
fair, fair,
the
fair,
risk
fair.
that you're
So
referring
it
to,
is
you
good
know?
to start with that, to get to know how to analyze the stuff, and then you make the smart
Yeah.
decision because you don't have the emotional load. And then when you get to the point in which you got to deal with the emotional load, at least you have the tool sets to know how to analyze. Yeah, true, good point. Yeah,
Yeah. Right now, the way that bonds are actually kind of giving a good enough yield,
yeah.
it's there's no shame in anybody having like a lot of my friends like tell me that they have their money parked in like a high yield savings account,
Mm-hmm.
and I'm like yeah, I'm like this it's not bad, you know. It's like if you're
Yeah,
trying to first understand the thing that you're getting into, at least a little bit, you know,
yeah,
you should study, and then in the meantime, at least your money's it's different than it was in the past 20 years where you kind of like needed to own stocks or real estate because any that you weren't getting any yield on your capital
right,
anywhere else. You know what I
right.
mean? So
Yeah, savings account now because
nowadays
of
you have
interest
so
rates.
much,
Yeah,
yeah, so much like so many like tools at your disposal. You know?
yeah, yeah, yeah. That's also
All
true.
right.
Like
You-
the
I
amount of
think that's a.
information.
I think we're good
Yeah, we are at the
to.
time mark for sure. Yeah. So
Yeah, perfect. I mean, we could chill. I don't like we could stay on whatever and keep talking, but
no, yeah, but let
I
me
think
tell the people
for
on
the
YouTube this is the end of our first episode here at Finance Friday, which will be called actually the really good. What is it that we ended up with? The really good show about financial investments. A really good show about financial investments. You can find us on YouTube. I mean, you're watching this on YouTube, so let us know in the
in a
comments what you
variable
thought.
market.
Uh,
Did
uh,
we
it,
not put in the
no,
variable
we kind
market?
of fit. It just doesn't let us. Like YouTube doesn't let us.
Oh man,
But yeah, right now our
I
YouTube
never know.
channel is called where is it? The really good
Subject to
show about
change.
financial investments subject to change. The really good you can find it at the
Subject to
really
change.
good show. And but anyway, you already watching this on YouTube, so you already know the name of the channel that we ended up with. And let us know in the comments what you thought of the episode and what we discussed. And you know, if you like the video, like it. And if you want to see more of this, subscribe. And we hope to see you again next week. And thank you for being here.
Yeah. Also, give us name suggestions in
Oh
the
yeah,
YouTube comments if you're there.
yeah, exactly. Because everything is subject to change because it's a variable market. So let us know.
Yeah.
But yeah, thank you very much for being here.
We'll change the name of the channel to the most liked comment in 24 hours.
There you go. Rush to it. All right. Thank you guys.